I love that you also included the debt pay down, the amortization of the loan, because I don't always include that when I'm
Yeah,
talking about it. So that was a
yeah.
little more depth. So a person could invest $300,000, and because of equity,
Mhm.
that 300,000 became 1.4 million because you added the 1.1
That's
plus the
yes.
300. So 300,000
Yeah.
became $1.4 million. That's the magic of equity based on appreciation and amortization, pay down of the
Mhm.
mortgage and appreciation of the asset because of forced appreciation. In fact, you didn't even talk about the market going up. You just said raised
No.
rents, we improved our expenses, and we were able to get this access. Now, this is something that's important because you have taught this your entire career. As a syndicator, you're not giving
Yeah.
away just interest because interest would only be income. Interest would only be
Mhm.
like an income-based challenge, which doesn't
Yes.
give an investor exposure to the market or exposure to forced appreciation. So one form of appreciation or amortization of the loan as well. So your investment strategy actually allows a person access to equity, which makes it different
Yes.
from the bank, which does not give you
Yeah.
access to equity. They just give you interest.
For sure. What you're saying is so, so right. When we put our money in the bank, they're going to give us the interest on that money 4%, 5%. CDs are there. Of course, we buy stocks also. Let's say we buy stocks. You have to pay the full price of Google stock to buy that. And when it goes up, you make interest on that or gain. We call it gain in that stock. In real estate, the beauty is the leverage. Leverage is something that we just don't really think about many times. That's why a lot of money in retirement funds and all flowing into real estate or any kind of businesses is you're putting a little bit money down. For example, if we put 100,000 down and we got 75 LTV, loan to value ratio with the bank, now you're getting an asset worth 4 times because the bank came in. You're not really controlling 100,000 of your investment, but you're controlling 4 times that, 400,000. And that set is going to increase at the 400 to 800 maybe, right? Not the 100 will go to 800, but 4. So the leverage is the key right there, which we sometimes miss. The other part is that uh, investors, investors need to be your partners. Syndication, the word is like-minded people getting together to pool the money together for a common cause, which they like it, and then sharing the profits. The profits will be not only the cash flow that the asset is giving, but the gain of the value also. That's why in my life, I've been doing it for 18 years or whatever, and my investors get 80% and 20% the GP and the LP get 80, or 70% the GP LP gets, 30% the GP gets, right? So what we are working on a daily basis, we find the deal and we do everything. We do underwriting, we do due diligence, we manage the asset, we sell the asset. We are working 70% of our efforts are working for the LPs. So it's a good thing because otherwise I wouldn't have been able to buy $64 million deal. You know, that will take me how much at 30% down? That's $18 million, right? But
Right.
to raise the money, so the investors are a very important part of the equation.